and welcome to Ticker Tapes. It's Wednesday, which means that it's time to take a look at the world of cryptocurrencies. Cryptocurrencies are often said to share similar properties to gold, that is, as a hedge against inflation, a store of value, and an alternative form of money. ETF manager VanEck clearly agrees with that comparison because it has applied to the SEC for permission to launch a new ETF that would track both cryptocurrencies and gold mining stocks in the same fund. VanEck submitted its application on Thursday last week, and the manager plans to create an index that will track the performance of the two asset classes, which the ETF will then mirror. Though the ETF would not directly invest in cryptocurrencies itself, instead, it might have a holding in stocks that are cryptocurrency-centric or related. For example, MicroStrategy, headed up by Michael Saylor, or Block Inc., led by Jack Dorsey. VanEck is not the first manager to launch a crypto-related ETF, however, and just last month, Grayscale partnered with Bloomberg to launch the Future of Finance Index and an ETF of the same name. The fund has had a tough time over the last month and is down by 17.39%. That negative performance may help to explain why VanEck wants exposure to gold in its crypto fund. After all, gold is up by some 9.71% in the last month, and the U.S. Gold Mining Index has gained by almost 23% in that time. Bitcoin may be struggling to get back above $40,000, but it's moved to the highest ever levels against the Russian ruble. The ruble, of course, came under intense pressure as the U.S. and other Western governments sought to isolate Russia and its economy following its invasion of neighboring Ukraine. Russian investors are thought to have been selling rubles and buying Bitcoin in order to protect the value of their money from the savage depreciation of their domestic currency, which has fallen by more than 83% versus the dollar over the last month. The flow of Russian money into Bitcoin comes as blockchain analytics firm Glassnode publishes research that shows flows of coins into most Bitcoin exchanges have been negative since July last year, with total net outflows across all exchanges of 46,000 coins. It's not been a level playing field, however, with Binance, Bittrex, Bitfinex, and FTX seeing inflows of 207,000 coins between them, while other exchanges have seen a combined outflow of 253,000 Bitcoins. That suggests that the larger exchanges are consolidating their positions at the expense of the smaller players, something that clashes directly with the themes of decentralized finance, or DeFi, and decentralized exchanges, or DEXs, which have been growing in popularity among traders in the wider crypto markets. Pizza chain Papa John's may be on a collision course with UK advertising authorities over its plans to give away 20,000 NFTs, or non-fungible tokens, to its British customers. The tokens will be minted on Tezos and will take the form of one of 9 hot bag designs. Papa John's has fallen foul of the UK Advertising Standards Authority in a previous NFT campaign, the adverts for which were deemed to have trivialized investing in NFTs and were said to have taken advantage of the inexperience of consumers. Papa John's was forced to withdraw the advertisements. It was a branch of Papa John's, of course, that famously sold 2 of its pizzas for 10,000 Bitcoin in 2010, the equivalent of around $40 back in the day. But those coins are now worth more than $380 million.